teaching applying seasonal tendencies to higher time frame analysis. This module is going to be teaching bullish seasonals in higher time frame analysis. Okay, you've probably seen this chart before. I've made available a few of these templates over the years, but we're going to be teaching specifically only on the buy side for seasonal tendencies in this teaching. And we're going to be using the Canadian dollar to begin with. And what this is it's a 40-year seasonal tendency where the price on bullish years and bearish years have been compiled and compressed into a file where the output gives us a tendency for what price usually does for each contract delivery month. I'm going to get into that in a minute. Before we get into it deeper, let's bring up some points here. Seasonal tendencies are merely a proverbial roadmap of past performance, and they are not to be viewed as a panacea or a be-all, end-all concept. Despite what you may see in this teaching and the subsequent teaching in 4.2, please let me remind you that simply because it's done something in the past doesn't in any way guarantee it's going to do the same thing in the future. This is just one more tool to add a confluence of things that would already lead you to an expectation that the market should go higher or lower. Okay, folks, this is the Canadian dollar 40-year seasonal tendency. This is an expanded view of the same chart you just saw. And I want you to take a look at something real quick. Up here we have, it says March abbreviation, June abbreviation, September's abbreviation, December, and then back to March again. What this is delineating is the contract delivery months for the Canadian dollar. Now, currencies, they deliver on March, June, September, and December every single year. These months expire. These charts that I'm sharing with you are a compilation of data over all the delivery months, price action for the last 40 plus years, beginning in 1976. Now, this data is only compiled up to 2015, but I can tell you that the output is hardly changed at all. If you're concerned about it being 2017, is there any deviation? No, there's not any deviation at all. So how do we look at these things, and what benefit does it give us? Well, let me ask you a question. If you were to ask the average trader that just now is getting into trading, maybe it's not Forex, maybe it's stocks or commodities, and you ask them, hey, look, if I were to ask you today, is the markets manipulated to a degree where well before price ever starts to trade in a specific time of year, would it be inclined to go higher or lower based on some underlying influence that repeats itself? And as a new trader, I could tell you I would have never answered that question with, yeah, I could probably agree to that. It felt like a random thing to me. And one of the things that I like about seasonal tendencies is it gave a characteristic to price that proved to me that there is a rhyme and reason behind everything that goes on. If there's something that's measured, and again, this is 40 years worth of data, okay, 40 years worth of data in the blue line. The red line is a 15-year average. So you can see between looking at 40 years worth of data and 15 years worth of data, there's very little discrepancy in terms of what the overall strong seasonal tendencies are for this particular currency. Now, since we're primarily dealing with bullish seasonal tendencies in higher time frame analysis for this module, we're going to not focus on bearish patterns, but we're going to be looking for tendencies that lend well to being a buyer. And if we're going to be doing higher time frame analysis and we want to be buying on these higher time frame charts and using it for ideas for being a position trader, looking at this seasonal tendency, I'm going to ask you what time of year. Now, time of year is going to be delineated at the bottom of the chart down here. You can see it's all data. Here's December, November, October. This is all calendar month based. This is contract delivery months. Okay, and you can see the vertical lines delineating when that contract. March would end trading here. That would be the beginning of June's trading contract. And then June would end here, and it would pick up at September's contract, and so on, going through the seasonal tendency chart. If I were to ask you, what would be your first choice in deciding when would be a good time to buy? Well, if you were paying attention, you can see that this is probably a really good time to be buying around mid-March all the way up into the May-June time period. So between March and June, there typically is a strong tendency for the Canadian dollar to rally. Now, some of you may think to yourself, well, that's great. If this is the contract month for Canadian dollar, what does that mean to me if I'm not really a futures trader? Well, the main thing is this is the seasonal tendency that you would expect Canadian dollar futures to rally. Now, it does not mean that it's going to rally every single year, March to June. It doesn't mean that. It just means that there's a strong probability that historically, looking back over 40 years worth of data and comparing it against 15 years worth of data, there is a strong underlying, well, dare I say it, element of truth to the fact that there is a tendency for this to rally. Problem is, if you're not a futures contract trader, this doesn't do anything for you, or does it? If we are trading foreign exchange, we have to remember that the Canadian dollar is paired with the dollar index. Now, the dollar index is the first in the pair's name, so that means if we're bearish on Canadian dollar, the US CAD is going to go up. If we're bullish on Canadian dollar, that means the US CAD pair is going to go down. That means Canadian dollar is bullish, while that would suppress the US dollar index. So since the pair's name begins with US dollar, opposite would be seen in what we expect to see in the futures contract. So what we have to do is focus in on the seasonal tendency on the futures contract that shows us a bearish tone in the marketplace. So you can see right here between September and around Christmas time in December, there typically is a strong tendency for the Canadian dollar to decline in the underlying futures contract. So we have to take this into account when we're looking at foreign exchange, because the US CAD pair is an inversion of what the futures contract shows for Canadian dollar futures price. So if there's a strong tendency for September, October, November, and December to have a decline in the Canadian dollar, that should be a bullish scenario for US CAD. Let's take this over to the charts and see if this in fact has any validity to it. Okay, we're focusing on the bullish seasonal tendencies. We have our US CAD chart. This is a weekly chart, and I went back to 2008 just to give you a nice sample size of data. And I started the line at the beginning of September, and I carried it out in time to about midpoint of December. You can see that shaded area all the way to the left here. This is when we'd expect to see the Canadian dollar to be bearish on the futures underlying contract price, but because we're foreign exchange traders, we have to be looking at it to be reversed or inverted, so that means it would be bullish for the US CAD pair, because this is how we're trading the major, US against the CAD. So this is the buying opportunity that would be presented, and look at the performance here on US CAD as a relationship to the seasonal tendency. Look how strong that buy was. Look how many pips it moved. Notice also in here, this is the next time period, the very next year, in 2009. This is the time when the seasonal tendency should take place, and that means the Canadian dollar should be bearish on the underlying futures contract, but that would be an inversion on US CAD pairs. So that means we would expect bullishness in here. Now, while we didn't press up to make new higher highs, there was a nice little pop, nice little rally in here, but overall the direction was down. So you can see how the seasonal tendency really wasn't much help in terms of seeing much like this, higher prices. Very next year, same thing, very weak, it was lower. Now I'm going to ask you a question. Look at these last 2 years. What was the underlying price direction on the weekly chart? Was it bullish or bearish? Bearish. It's been going lower. So would you be focusing on buying that time of year versus looking for opportunity to be a seller? There's a hint for the next tutorial, 4.2. Going to 2011, we can see that the seasonal tendency had a really nice effect here after we made a nice low and market structure shifted to the bullish side. Institutional order flow is now bullish, and during a time of year when the underlying futures contract for Canadian prices should be going lower, that's bullish for US CAD. So for a foreign exchange trader, we're looking for buys, we have to look for weakness in the underlying futures contract of the Canadian dollar. That would propel price higher at a time of the year when we would expect prices to come in. Same thing here, the very next year, 2012, we can see price again rallied up during this time of the year. And now we're still bullish now. Look at the effects of the seasonal tendency again. We have a low and it starts rallying up again. Again, same time of year, September to almost Christmas, seasonal tendency rallies again. Again, same time period here, rallies again. And again, 2016 just passed. We have a nice rally up here as well. Seasonal tendency come again, once again strong. Now, looking at this again, let me remind you, what we're looking at is underlying weakness in the futures contract. So if it's underlying weakness in the futures contract for the Canadian dollar, the inversion puts it to a bullish stance for US CAD. So it's very important. That's why I taught this one specifically, because I'm showing you how we have to take the seasonal tendency from the futures contract. Some of the majors that are paired with the dollar, their currencies start with US CAD, so it's going to be an inversion. So what you would expect to see in the futures contract has to be reversed in some of the currencies that are paired up with the dollar. So now, by itself, it doesn't mean anything, but coupled with other things like quarterly shifts, remember that? Every 3 to 4 months, there's going to be a move on a higher time frame. Now we're adding another dimension to that. It's one thing to expect a move every 3 to 4 months, but where is that move going? What should we be focusing on? Should we be buying or should we be selling? Seasonal tendencies give us a roadmap to help build the idea that, okay, there's certain quarters of the year that we want to be a buyer, and there's certain quarters of the year that we want to be a seller. And we anticipate this year in and year out. The only difference is we're going to be looking for markets that are already predisposed to go higher, and then coupling that with the bullishness of seasonal tendencies. If we're looking at the Canadian dollar, we'd have to reverse it, look for weakness in the seasonal tendencies on the underlying futures contract, and then apply it to the US CAD as bullishness, because it's an inversion of futures contract prices for Canadian dollar. If we see times when the Canadian dollar is bullish underlying US CAD pair, and this seasonal tendency, September to almost Christmas, every single year, there's a strong tendency for it to be bullish between that time period. That means there's many weeks where you can be a bullish US CAD trader if the underlying pair of US CAD is bullish. This is going back several years, and I only gave you this sample size because if I give you any more data, it'll ruin all the discoveries if you go back and study it for yourself. But you can see here clearly many instances when the underlying market moves are in line with the macro trend. Seasonal tendencies are absolutely a barn burner for delivering what you should be doing for each quarter of the year. In this case, you have a loaded deal. If you're looking for a buying opportunity for US CAD, it's between September and getting close to Christmas every single year when the market's predisposed to go higher. What quarterly shift are you going to be looking for now? Looking for longs. Okay, so now we're going to look at a market that's closely related to Canadian dollar. Its number one export is crude oil. And here we have another example, just as a supporting idea. If you looked at this market over here, you would expect to see bullish prices or a rally in the crude oil market. And that rally comes in coming in about mid-February going into March and carrying into May-June time period. So we're expecting bullishness in the crude oil market, and since Canadian dollar generally moves almost in tandem with oil, the strong tendency for the Canadian dollar to rally and the crude oil market to rally at this time of year, that means we have a March to June, basically a bullish effect for Canadian dollar and crude oil coupled together. So that's a strong tendency. But again, because we're looking at Canadian dollar in the foreign exchange market, this would have to be reversed. So we'll save that study for you in addition to what's already been presented here, but I want to show you the futures contract price for crude oil between around March to June time period. Okay, here's the crude oil market. This is the weekly chart, and I just went back to January 2014. And obviously you can see this is a bearish market here. It's been in a long-term downtrend when the collapse of the oil market from around the 105 level. But let's take a look at the bullishness of that seasonal tendency. Again, looking for that March to June time period. Okay, so here's March all the way through to June. And you can see the rally in the crude oil market right when it made its high in the 2014 time period. And the next year, we'd be looking for the same seasonal tendency between March and June, all the way up into the 1st of July. We can see it again here, rallies once more. Even in a bear market, it's still there. We don't force the trades, but I'm just showing you the seasonal tendency that's existing in the marketplace that should convince you that there is an absolute program to everything that goes on. Despite supply and demand factors, there are very routine things that take place, and they repeat themselves over and over again. And again, in 2016, we have March to the 1st of July, encompassing the whole month of June. You can see that rally again comes in for crude oil. Now, my question to you is this. If you can see these opportunities repeating themselves based on the data that I'm sharing with these reports and seasonal tendency charts, is it hard not to feel like they're treasure maps? Because that's exactly what it felt like for me as a young man when I was in my 20s and I saw these seasonal tendency charts. And I admittedly pushed them aside for the first couple months. And then finally I got into the study of seasonal tendencies, and I realized that quickly right away that there is something to them. Now, admittedly, I've lost money trading them in the beginning when I had no idea what I was doing. I just thought every time it would work. So therefore, I loaded up the boat and traded way too many things and too many times. Got burned doing it. So I put it on the back burner until I realized there's this quarterly shift that takes place in the marketplace. And I'm matured now, and I can look back and I can pick out where the highest probability seasonal tendencies are for certain times of the year. Certain markets have really strong seasonal tendencies to move a specific 3 to 4 month cycle every single year when it's bullish and when it's bearish. If we can focus in on those quarters, on those particular currency pairs or those asset classes, we have a loaded deal in the form of odds. It doesn't mean it's going to be profitable every time. It doesn't mean it's a guarantee that it's going to be accurate. It just means that we have a high odds probability that our prognostication will lead us to a successful outcome. This is just one example of how correlated pairs between Canadian dollar and crude oil both can lean well with one another in terms of seasonal tendencies. And even in the bearish market, the crude oil market's been in, you can see that the nice big rallies that's occurred happened to script with a seasonal tendency. We're going to teach more about this in Module 4.2, and we're going to talk about the bearishness as well. And in that module, I'm actually going to share all of the seasonal tendencies I have for all the currencies. And until next time, I wish you good luck and good trading.